money is a market good, just like anything else, just like a cheeseburger or a car or a plane. But the difference is I acquire a cheeseburger to consume it and eat it. I acquire a car to consume it and move me on the road. I acquire a plane to consume it and fly me somewhere. I acquire money uniquely not to consume it. It's the one market good that I don't consume. I'm acquiring the money to save and exchange it later for the things I need. And so money performs that job as a technology. So when people say money is whatever we think it should be, like what we can make water bottles money if we want to, it's like, no, but you can't make a water bottle an airplane if you want to. If you get on a water bottle and jump off your roof, you're going to get injured. It's a technology just like all other technologies. It has a job to do in the market. And when you understand that job, you realize you don't have to store your wealth in real estate or in equities. The job is to store and save the wealth you've created and then somehow exchange it for what you need in the future. And Bitcoin fundamentally is better at that job. And it is the technology purpose-built to fill that role within the marketplace than everything else.
In this insightful interview, Jack Mallers, CEO of Strike, explains why Bitcoin is the ultimate form of money in a world of increasing currency debasement. He delves into the concept of money as a market good, highlighting how Bitcoin's unique properties make it superior to real estate, equities, and traditional assets for preserving wealth over time. Jack also shares bold predictions about Bitcoin's future price, driven by its scarcity and ability to demonetize other forms of wealth. Stick around until the end to hear Jack's compelling vision for how Bitcoin can fundamentally reshape the financial system and why it remains the best hedge against an uncertain economic future. Also guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, over to Jack.
Am I right in this that you've forecasted 500 to 700K for Bitcoin sometime between 2025 and early 26?
Yeah.
Is that an accurate
it's actually, yes, it was 250 to a million, but I'll take 500 to 700. I'll take that.
Okay. Why? Take us through why.
I think we're going to see one of the greatest asset bubbles in human history. I think the fiscal situation is a problem. And, I used to do media appearances and say that, and now I get the benefit of the Fed also thinks the fiscal situation is a problem. Our new administration thinks it's a problem. Every economist on CNBC thinks it's a problem. It's officially alert, danger. This can't last. Jamie Dimon. This is the first time I've agreed with Jamie Dimon on pretty much anything. So I think the problem is we have too much debt. And the way I would say it is that someone has to realize the loss, right? Domestic debt to GDP, close to 130%, global debt to GDP, well over 300%. And so there's a loss that has to be realized. And the question is, where are we going to realize that loss? Are we going to render all bondholders poor? Probably not. My expectation is further currency debasement. My expectation is further asset inflation. And my expectation is Bitcoin will continue to be the best performer because it's the scarcest and the hardest to make more of. In fact, it's the only thing you can't make any more of it. So the 250 to a million range it's a crazy buffer for me to say out loud. But the reality is, if America comes out and buys 4 million Bitcoin, I think Bitcoin ticks a million easily. If not, and we get interesting fiscal policy from this administration, well, then 250 seems decently reasonable. By the way, to the viewers, this isn't the new normal. The way this market operates is that it enters violent price discovery and then it falls. So I do expect a drop. I'm talking about what's the new all-time high, where will it tick? But I do think that we're in the early innings of a bull run and there are many multiples to be made in 2025. I expect a weaker dollar and further debasement in assets.
Jack Mallers begins by addressing a fundamental question. When Bitcoin reaches $700,000, is it because the dollar has been massively devalued, or is Bitcoin genuinely gaining real value? He believes it's a combination of both. Currency debasement will continue, but more importantly, Bitcoin is demonetizing other assets by outperforming them as a store of value. Jack explains that traditionally, people have stored wealth in assets like real estate, stocks, and gold because fiat money loses purchasing power over time. However, these assets weren't designed to function as money. They serve other purposes. Homes provide shelter, equities fuel companies, yet they've been monetized due to the lack of a better alternative. Bitcoin, on the other hand, was created specifically to act as money. Unlike real estate or stocks, its sole purpose is to store wealth and facilitate future exchange. He uses a simple analogy. Just as a cheeseburger or a car is consumed for its utility, money is a market good designed not to be consumed, but to save and exchange for future needs. Jack concludes that as more people recognize Bitcoin's superiority in fulfilling the role of money, they will sell assets currently being used as stores of value and convert their wealth into Bitcoin. In his view, Bitcoin is purpose-built to solve the problem of a devaluing currency and offers a better alternative for wealth preservation.
So this is the central question. I've asked Novogratz this, I've asked Saylor this, even Peter Schiff, actually. Peter Schiff brought up something interesting. So my parents' house was purchased in 1962 for $16,000. It's on Zillow. The estimate for that house is $780,000 today. But what Peter said to me, at $35 an ounce, how many ounces of gold was it to purchase the house? And then at $2,700 an ounce of gold today, and it turns out that the house is, it's worth less than the same ounces of gold. So meaning if I had that number of ounces of gold, it would be 1.25 million. But the house is worth 780. And then his point was, that makes sense because it's easier to build these houses now. We're more efficient, blah, blah. In real economic terms, the house has actually gone down in value. And so I'm using this as an example for you, Jack. At $700,000 per Bitcoin, is that because money, the dollar, has been crushed and we've monetized it down to 0.0001 compared to where it was in 1971? Or are we picking up real value? In other words, are we in a dollar crisis if Bitcoin is at 700,000?
No. To answer your question explicitly, I think a little bit of both. I think we will continue to see currency debasement, but I think Bitcoin is demonetizing other forms of wealth. So on the first one, are we in a dollar crisis that Bitcoin's at $100,000 today? I don't know. I went to Whole Foods yesterday and got a couple ribeyes. The dollar was fine. The store wasn't on fire. I mean, clearly there's civil unrest. Clearly people don't like the level of inflation they've been forced to live through. But is the dollar collapsing? No. Do I think the dollar's going anywhere anytime soon? No. But historically, assets have been inflating. So I think we will continue to see currency debasement. On the Bitcoin demonetizing other assets and where it's winning value from what I would consider competitors, the reality is, people have been looking to store their wealth somehow, some way, if they can't in dollars. And that's not a controversial opinion. Nobody owns strictly dollars. If you can afford to, you own real estate portfolio, you own a stock portfolio, you own gold, you own something else that can appreciate in value over time. And so people have had to monetize real estate, equities, all these other things that aren't actually money in the first place. And so my expectation is that Bitcoin will continue to win over the demonetization of those assets. So instead of owning 10 homes where you only consume one, you own one home and the 9 you sell and you buy Bitcoin, because Bitcoin performs better as a money and performs better as a store of value and performs better in percentage terms and in real terms against the dollar or whatever your unit of measurement is. So I think it's a combination of both. And I think this is a good opportunity to walk the users through, what is money and its intended purpose in a marketplace. So money is a market good, just like anything else, just like a cheeseburger or a car or a plane. But the difference is I acquire a cheeseburger to consume it and eat it. I acquire a car to consume it and move me on the road. I acquire a plane to consume it and fly me somewhere. I acquire money uniquely not to consume it. It's the one market good that I don't consume. I'm acquiring the money to save and exchange it later for the things I need. And so money performs that job as a technology. So when people say money is whatever we think it should be. Like, what, we can make water bottles money if we want to. It's like, no, but you can't make a water bottle an airplane if you want to. If you get on a water bottle and jump off your roof, you're going to get injured. It's a technology just like all other technologies. It has a job to do in the market. And when you understand that job, you realize you don't have to store your wealth in real estate or in equities. The job is to store and save the wealth you've created and then somehow exchange it for what you need in the future. And Bitcoin fundamentally is better at that job. And it is the technology purpose built to fill that role within the marketplace than everything else. My house was built for someone to live in it, not for me to be able to save and exchange later. Equities is built to run a company, not to be a money, right? So I think people will sell the assets that they're using as money because of the unfortunate situation of a devaluing currency and convert it into Bitcoin, which Satoshi built to solve that problem of a market good that you don't consume and you save it and use it for future exchange.
As we wrap up this captivating interview with Jack Mallers, it's clear that Bitcoin is not just an investment, it's a solution to a deeply flawed financial system. Jack emphasizes that thinking you're late to Bitcoin is a failure of ego. The focus should be on long-term value, the unique properties of Bitcoin, and its ability to serve as the ultimate store of wealth in an ever-depreciating economy. Jack's bold insights remind us that Bitcoin represents a global team effort, one where anyone can join and benefit from a fair, decentralized system. Whether you're a beginner or a seasoned investor, the message is simple. Humility, consistency, and time in the market will always outperform trying to time the perfect entry. Thanks for watching, and if you enjoyed this video, please remember to like, subscribe, and share your thoughts in the comments section below.